Welcome to This Explainer. We hear it all the time, right? It takes money to make money. Well, our source material today completely turns that idea on its head. We're going to break down the exact blueprint for going from basically an empty wallet to building lasting wealth. It's all about how to use minimal capital for maximum leverage. Let's get into it. Seriously, do you think you need thousands of dollars just to get your foot in the door? It's so easy to see these massive portfolios on the news and just assume, well, I'm locked out. But today, we're unpacking why a tiny amount of focused capital is actually the ultimate seed for your future wealth. Okay, let's dive into our roadmap for today. First up, the big investing myth. Second, we'll look at the power of compound growth. Third, 3 ways to start. Fourth, mistakes you absolutely must avoid. And finally, your wealth building blueprint. All right, Section 1, the big investing myth. Is it really only for the rich? So, there's this huge myth that literally paralyzes people, the idea that investing is this locked vault that's only accessible to wealthy elites. But what's really interesting about our source material is how it totally shatters this limiting belief. The truth? Being a successful investor isn't about the size of your starting pile at all. It's entirely about starting early and, most importantly, staying consistent. Moving on to Section 2, the power of compound growth, the math behind wealth. Now, you might already know about compound growth. That's when your money earns returns, and then those returns start earning their own returns too. It's like a snowball rolling down a hill. But the really fascinating takeaway here is how the source emphasizes time over the principal amount. I mean, investing $5 or $10 a week might feel, kind of insignificant at first. But compounding relies on the calendar, not all those initial zeros, to work its absolute magic. So the crucial point is this simple formula. Small amount plus time plus consistency equals big results. That's the secret sauce. You don't need a massive inheritance or some overnight stroke of luck. The heavy lifting is actually done by the clock, as long as you just don't quit. Which brings us to Section 3, 3 ways to start. These are beginner-friendly paths you can take right now. Let's move from the theory into real-world action. How does this actually build? Well, the source outlines 3 very distinct, highly accessible avenues for people with small capital: index funds, learning a skill, and building an online business. First up, index funds. Now, without getting bogged down in complex mechanics, the source highlights this as basically the ultimate low-friction entry point into the market. By spreading your money across tons of companies, you capture the broad market's upward trend. It totally removes the high stress and high risk of trying to pick individual winning stocks. That makes it incredibly accessible if you're just making small, consistent contributions. But, hey, the highest leverage might actually come from outside the stock market. The text notes, and I quote, "Learning skills like video editing, graphic design, content creation, or digital marketing can produce returns far greater than many traditional investments." I absolutely love this. It's a powerful reminder that when you're starting from basically zero, investing in yourself, acquiring high-leverage digital skills, is very often the absolute fastest way to see a massive return on your investment. And that perfectly aligns with the third option, building an online business. The barrier to entry here, it is incredibly low. Think about it. You don't need to rent a physical storefront to start a YouTube channel, or to try out affiliate marketing, or to set up a digital product store. With just a tiny bit of upfront cash, you can create digital assets that scale infinitely and build multiple streams of income for yourself. It's a real game changer. Okay, Section 4, mistakes you must avoid. How to protect your capital. Look, as we start deploying our small bits of capital, we have to be smart and recognize the major red flags that trip up so many beginners. We're talking about things like promises of guaranteed profits, overnight success stories, or high-risk scams. Chasing those kinds of shortcuts is literally the fastest way to lose your hard-earned starting stake. Real, sustainable wealth requires patience and measured decision-making, not a lottery ticket mentality. Finally, Section 5, your wealth-building blueprint, your path forward. The core mantra we can pull from all of this source material is so refreshingly simple. Start small. Think big, grow wealth. Honestly, all that intimidation just fades away when you realize that $5, a commitment to consistent learning, and a long-term focus are literally the only tools you need to begin your journey. Because the absolute best investment you can make is the one you actually begin today. We've explored the blueprint, we've done the math, and we've laid out the distinct paths forward. So the only question left for you is, what will your first investment be today? Are you going to fund that index account, learn a new digital skill, or launch your online business? The choice is entirely yours. Thanks so much for joining me for this explainer, and we will catch you next time.